All right, so a lot of people ask me when I pitch them the idea of investing in GME and why I believe in GameStop as a company, and when I explain the thesis behind the mother of all short squeezes as being an added on to the investment proposition, the common question is, if all this hidden short interest is there, and all these shorts need to be covered, and it's probably commonly known in the financial system, why has nobody tried to force the squeeze, right? Well, a couple things. First, I'm not here to provide financial advice. These are simply my thoughts and opinions on the matter. But it's possible that funds have tried to force the squeeze, right? When we look at the fact GameStop exploded to 483, I believe was its peak, maybe 500 in the after hours or pre-market during that whole saga last January 2021. Then after that, we saw a massive dip, and then it came all the way roaring back to 350, only to dip again, kind of trade sideways, back to 350, and then we were kind of in no man's land for a long time until we just started declining, right? It's possible those two prior run-ups were a fund, a bank, maybe a couple of them trying to force the short's hand in a way, right? But as bizarre as it sounds, if one single fund were to come in and just buy up like half of the float of GameStop, right? Basically, and then registers at the computer share, whatever they do, right? The point is, for somebody to go on the long side and go big and really press and put the pressure on the shorts, you know what's probably going to happen? As crazy as it is, the SEC, governments, regulators of some kind are going to step in and say, no, you can't do this. This is manipulating the financial markets, you know, you're too much ownership, whatever they would say. They would probably, most likely, in my opinion, block it in one way or another. And you're ridiculed by all your friends in the financial industry because they're all in bed together. They're all interconnected one way or another. That's how the American financial system has been built and continues to be built upwards with more and more liquidity, or I should say lack of liquidity, because it's a lot of buying on margin, buying on margin, buying on margin, more leverage, more leverage, more leverage, more leverage, right? That's how this whole situation started in the first place. So my thought process is no one big bank or institution can come in and ignite the mother of all short squeezes. It has to be individual investors, because how does the SEC or governments of any kind or any entity of the American government supposed to be or supposedly regulating the financial markets, how are they going to go after millions of retail individual investors just holding the stock in their own name? Because that's what Computershare is. How are they going to challenge them on that? Will it cause great turmoil in the financial system and the stock market as a whole when the shorts do eventually cover? Probably, but who can you blame? People who like the stock? My theory is too that when it comes time where shorts are completely back in the corner, shorts begin covering, the stock price finally starts to realize its true meaning and what it should truly be trading at as a result of all the short interest, it's bound to bubble up. And when that does, they're going to blame you, the retail investor. That's what the narrative is going to be. Oh, all the individuals are crashing the stock market. They did this and that and this and that. But you can't find anyone. Nobody can get in trouble, really, right? This won't age well if somehow the SEC is knocking on my door in 10 years, right? Then they're probably going to be showing me this video. Hi, future Noah. But you get my point. It can't be one institution or one bank. It's all individuals. How do you go after individuals if they're just investing? Because that's what they're legally allowed to do. You're allowed to invest in companies in America that are publicly traded. That's it. So, but if you're a big fund or you're a big bank, you have all these regulations, you have to balance your holdings, you can't hold too much of anything. So they make it complex, and they will, just as they make it uncomplex to let things slide, it's just as complex on the other end of the spectrum to make sure, like, no, you can't do that. That doesn't happen. You can't come in and buy half of GameStop's float when there's all that hidden short interest away. You cannot do that, Mr. JP Morgan, Mr. whatever, whale hedge fund. You can't do that. So what's going to happen? The only way the mother of all short squeezes is ignited is by individual investors. And that's why this whole thing is about individual investors, right? There might be some longs on GameStop. Of course, it's like any other stock. That's what people forget. This is still a stock. There are longs and there are shorts, right? But it's just so exceptionally short. And there's mathematic evidence, in my personal opinion, based on what I've read and done my own research, that shows me that the shorts have in fact not covered their position. And because I still like the company and what I think they're going to do is going to be massive, that makes me excited to remain invested in them. I'll continue to hold. And then the potential of all these shorts covering in a really short period of time that drives the price to astronomical levels just makes me that much more intrigued as an individual investor. As always, just my thoughts and opinions, trying to just full circle all this stuff and document as this situation continues to play out and continues to get more and more interesting. Keep reviewing the data, keep watching the news or lack of news or whatever you want to call it. But the GameStop situation, in my opinion, is far, far, far from over. There's a lot more to come from this saga. And even if you're not invested in the company, I think it's still a hell of a lot of entertaining to watch. So have a great day.